Good morning, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing Podcast. As always, I am your host, Real Estate Cody, and with me, as always, the coffee connoisseur, Mr. Brian Alfaro. What's up, buddy?
Cody, I have so much energy after this past weekend and after the mastermind we had here in Houston. I just want to jump out of my chair and have an awesome conversation with Dina today. Let's go buy some buildings.
Dude, are you not on that high still? I want to go just buy the entire city. Forget the building. Let's
Absolutely.
just
Yeah.
go buy everything.
When
Yeah.
you spend a
Yeah.
weekend with Jake and Gino, meet great people, and then get to connect with true rock stars like Robert Martinez, Jorge Abreu, Ellis Hammond, and then Grant Cardone shows up. I mean, what more could you ask for?
Yeah. You
Amazing.
can't, it's incredible. It's incredible. There's no words, man. So yeah, I'm with you, buddy. Let's make some good things happen. And let's start off with introducing our very special guest this morning. Tell us who that is. Oh, Brian, lost your audio.
Oh, there we go.
There you go.
Today in the hot seat, we have Dina Buchanan, who's the Director of Investor Relations at the PCRP Group. She's based in Orlando, Florida. Dina is the Director of Investor Relations, as I mentioned, which is a firm that provides direct access to tax-advantaged passive income commercial real estate opportunities. Dina has been investing in both residential and commercial properties in the United States and internationally for over 19 years, and has acquired or has been responsible for overseeing approximately $200 million of assets under management. Dina has trained, led, and inspired tens of thousands of people in real estate investing and personal development over the last 15 years and was named Speaker of the Year by the Whitney Education Group. Welcome to the show.
Thank you so much. And Brian, thanks for having me.
Absolutely. Cody and I are super excited to have you in the seat. It's always great to network with other like-minded people in the multifamily and real estate space. So looking forward to learning more about you.
Perfect. Love it.
Yep.
Well, I can share a little bit about PCRP, what we're doing, my background, to start out so you get to know me. My husband and I, we probably started out similar to a lot of you guys is back in 2002, maybe. We started to invest in residential real estate, and we went that direction just because we looked at, what other businesses could we do. We both had corporate jobs, both were working full time, and although we thought at the time it was a great paycheck, we realized that, we didn't own our time. So we wanted to do something different. Everything ended up always coming back to real estate. So we did residential real estate and had good success with that. I mean, we really enjoyed that process. And then, the more you do it, as you hit up on, landlording, and the passive income for residential is a little different than multifamily. And so I think we really got intoxicated in 2007. We bought our first apartment building, and then it was, okay, this is the way we want to go. And we love commercial. And we loved even more moving into more passive investments with that. It just made so much more sense. You could do so much more with it. It was really an amazing journey and has been. And I encourage everybody to get educated, align with the right people, and get started, because it's just it's life-changing as far as owning your time, being able to do what you want to do, when you want to do, how you want to do, and, live your best life.
I think we would absolutely agree with that, right, Brian? And Dina, I like the way you phrased that, intoxicated. That's a great verb there that I like to have to borrow from you. That's pretty good.
You're welcome to it. I always say too that real estate is our addiction, right? It's intoxicating. It's our addiction because, once you take that first opportunity, it just the rush, the feeling, the excitement, and knowing that you can do it, and lining yourself up correctly is key.
Yeah, you definitely can't just stop with one, right? It just
No.
and really that's the hardest part is getting to the first one. And then after that,
Yeah.
like the snowball starts to happen. And that's where you really find momentum and growth. And so yeah, absolutely. That's awesome. So you started in 2007 in the multifamily space, particularly.
Correct.
You mentioned passive income. Were you participating in these offerings on the general partnership side, or are you coming in as a limited partner? Tell us a little bit more about what that first exposure was and how you built your portfolio.
So the first exposure is kind of funny because two of my really dear friends who are also real estate investors, this building was in Wichita, Kansas, of all places. Now, they lived there. I had only been there to visit them, so I really didn't know anything about Wichita, but it was always good, first and foremost, to have boots on the ground for sure. But this was a smaller 27 unit, and it had 4 commercial units in the front of the parking lot, and it was on the main street of Wichita. So now when I say Main Street Wichita, way different than like Main Street Manhattan or Chicago or even Denver, so it was very small town. So this was definitely, modest. But it was when you read the numbers, I think that's when you get bit and get the intoxication, because you just start looking at, oh my gosh, with what is getting put into the deal versus what's coming out of the deal, and the cash flow, and how it was a Class B. And so we had some good opportunity for, creating more, equity in it and build up. And we happened to come upon it. The gentleman that was selling it because he had a personal situation. I think it was a divorce or something that he was going through, and he needed to liquidate quickly. So it was one of those deals where, it was an amazing opportunity, and like everything else, you have to take action. And so it was almost like we joked that we didn't really have a lot of time to worry about things or really be in fear, because it was like, here's the numbers, it works, it looks good, let's go. So it was a huge lesson, I think, in that realm.
You know what, Brian? So Dina was just explaining this, right? And we literally just heard this from, like you said, GC, Uncle G, Grant Cardone, right in the mastermind. And he's like, and his comment to the group was like, listen, you guys overanalyze stuff. You want to underwrite every little detail. You want to, make sure everything's perfect. And that's prudent. You should be as precise.
Yeah, you have to do your due diligence for sure.
But to your point, Dina, and this is so important, this is where a lot of people lose out on opportunity, is you get so stuck in the analysis and wanting everything to be perfect.
Yep.
That you actually talk yourself out of a good opportunity. And I think he even said that as well,
So
right,
true.
Brian? He said, the most money that you've lost is the deals that you haven't done.
Absolutely. Yeah, I can't agree with that more than enough. Yep.
Oh my gosh, it's so true. And I think that's, I got asked a question one time, if you could go back in time when you started, like take with you now, like what you know now, like what would you tell yourself back in 2002 when you started? And I didn't even have to think about it. I was like, get in sooner and buy more. Like
buy everything.
Hands down, right? Get in sooner and buy more, hands down. And that's what's so fascinating. It's like you say, we all, I don't know if we're trained to do this, maybe in school, or, like you're a smart person if you just sit in this tunnel or this habitual wheel of decision making. And it really isn't that hard. It doesn't have to be that hard.
Yeah. And I hate to keep referencing Uncle G, as Cody called him, but he mentioned this as well during our mastermind. He said that we have a problem where we've been trained that we can save our way to prosperity and that we can cut our way to prosperity, right? When in reality, that's just not the way it works anymore. Maybe a few generations ago, and our parents, and our parents' parents, our grandparents, like they were very prudent savers, and they thought that they could, work a job for 40, 50 years, build up a little nest egg, a savings account, maybe have a 401k or a pension, which are really hard to find nowadays. And you can save your way to retirement and success. But the world has changed very differently, and times have changed. Huge. And if you're gonna have a happy life after 50, 55, 65, you really got to find a way to invest not only in things that maybe if you're familiar with like the equities market, but you got to get some other asset classes as well, such as real estate, because you can't save your way to success.
No, I couldn't agree more, 100%. Whenever I'm teaching a real estate class, and I've taught many over the years, one of the big things that as of late that I've been sharing with people is buying power. I'll use the word buying power, or the phrase buying power, because it's really about how much buying power do they have? how far can they go? And you hit a really good point when you said about saving. I think when you look at the previous generations, like our parents, our grandparents, and great grandparents, even, money was looked at as a commodity back then. And it actually was more of a commodity because every dollar before 1971 was backed by gold. Now, when Nixon took us off the gold standard in 71, to accommodate debt, it was money could be printed and not have to be backed by that amount of gold. So it might have made sense. I mean, I'm not sure because we weren't back there, but it might have made sense for them to save. But for us, think about that. How many dollars are being printed and what is it doing to the value of everybody's dollars? I heard a statistic from one of my coaches, and he said 94% of Americans are unable to retire into the lifestyle they're retiring out of. That's crazy to me when you think about that number. But when you look at what's happening, it kind of makes sense because the more money that's printed, the more money in flow, it's going to take that much more to have the same lifestyle in 5 years, 10 years, 20 years. So if you look at the cost of living and what the expenses are and what the value of dollars are, and you do the math on that, I mean, it's just impossible, like number wise, to save your way. And money needs to duplicate itself 3 to 4 times to be able to retire into that lifestyle that you're retiring out of as a corporate employee. So when you think about that, that's just like mind blowing. So this is another reason why it makes sense.
Absolutely. It's easy math, right? I mean, the average corporate employee gets a 2% raise, a 3% raise every year. And then you've got the CPI inflation index over here pumping out 5%. And then let's be realistic. What's real inflation? Not this CPI thing, right? It's probably 8, 10, 12%.
Absolutely.
If you're getting 2% raises and inflation is 5, 6, 7, 8, 9, 10%, it's really easy math to realize, to go back to your point, your buying power is shrinking drastically, and you need to find a way to multiply your money. And real estate's a great option for that.
It is. And that's one of the things that I've always been a fan of. And I teach my kids this, and I teach their friends this, and I teach my students this whenever I talk to them, is you want your money working harder so you don't have to, putting that money to work. When you can exponentialize dollars at a faster rate so they can grow to outpace inflation, that's when you are what you want to call financially independent, financially free. There's a lot of different verbiage around that, but that's really what it means, that a person, an individual, doesn't have to trade their time for money if their money's out there working. And that's just, those are things that are just not taught to us in a traditional education environment. So it's no shock that all of us, had to learn this, later on, and luckily have aligned with people like Jake and Gino and getting involved in groups like that of people that really understand it at a high level.
Yeah, you're absolutely right, Dina. And, we were just alluding to this, I think last week, Brian, where we're so ingrained in our world of commercial real estate investing, right? We talk about it day in, day out, like this is our passion. And it's once you get out of that circle, you forget that this is not common knowledge. Like it's not, 95% of the people are still ingrained in the old traditional school of thought. And so, having a fiduciary responsibility to go out there and teach and educate about financial literacy and hopefully breaking the chain, so to speak, if you will, and help people get exposed is so vital. Because right now, going back to your point you're making a minute ago, is we're in this massive transfer of wealth. We're in the middle of it right now, where you see this greater divide between those who are wealthy and those who are not. And the middle class, we seem to kind of be getting spread thinner and thinner and thinner, right? And I think that's only going to continue. And so,
it's really, I think it's probably more imperative today than ever before to get financially educated, and really start taking action too. I can't emphasize the action taking enough, because no one's ever going to know 100% of everything, right? I've done real estate for almost 20 years, and my husband and I certainly do know a lot. And we would never be so arrogant to think we know everything and we couldn't learn more, which is why we continually educate ourselves and surround ourselves with people that are doing it even better and bigger than we are, because that's the way you grow. That's the way your business grows. And if your business isn't growing, it's dying. There is no neutral. So it's really about keeping up that momentum and being your best self too. And I think when you enjoy it, it just doesn't feel like work, right? It's fun. It's like you said, let's go buy. I feel like I want to go buy another building, right?
Yeah, no, you're absolutely right. I mean, and that's the beauty of it, right? When, like you said, you wake up every day excited to go impact the world, not only in your life, but the lives of the communities that you serve, that, the residents in your buildings and just the people that are investing with you. It's, you have such a powerful vertical here that you could really impact those around you, which is great. So, but, talking about the topic of momentum, I want to go back to, after your first acquisition, you had the 27 unit. What was the path of progress after that? What happened, how long it was before you got the next deal, and then, walk us down that journey.
So that 27 unit one, like I said, it was almost like the shotgun in a race, because we were just like, oh my gosh, we got to do this again. And we kept on, and we actually ended up doing another apartment community in that same area with those same partners, which led to another one. And then we got invited to do a land development deal, which that's a whole other animal. I described that deal as like, highs and lows, almost like feeling like you're on, like one of those roller coaster rides. It's like up, down, up, down, up, down. So that was completely, even though it's still commercial, it was different. And it was, half shopping center, half residential. And that came with some interesting back up against the wall moments and hard lessons and some triumphs, right? And we then realized that we really wanted to have our money work harder, and what we could do ourselves with buying the buildings and putting property management in place was awesome, and continued to do that. But we also started to invest in other people's larger commercial deals, like syndications. So we started to become limited partners in those types of asset deals. And that is when I feel like our portfolio exploded, because we actually could invest in a deal with a return on investment that allowed us to collapse that time frame of how quickly we could duplicate our money. For example, like one of the things that a very basic thing that I've taught students is like the rule of 72, where you take the rate of return and you divide it by the number 72, and that it gives you the number of years it would take for your money to double. So if you're looking at a traditional retirement account and like a 401k, like you said earlier, if you can get one, right? And it's maybe 6%, right? Just depending on average. I mean, there's some obviously that are higher and some are lower, but on average 6%, if you divide that by 72, that means the money in there, it's going to take 12 years for that to double approximately. Now, depending on where you are age-wise and where you want to retire, that just seemed like, wow, this is not going to work. However, if you can get into opportunities in syndications where, even a 10 to 12% return, that's going to make it 6 to maybe 7.2 years approximately for your money to double. And if you think of the trajectory of that, if somebody's got $100,000 and they can invest that $100,000, and where could they get that? Well, they could get that from their apartment buildings and leveraging. So it's all kind of connected, right? The residential, the apartments, and syndication, and being able to do that and maximize that. That's really where we saw some big momentum.
I'm really glad you're talking about this, Dina, because I know this is something that Brian and I really preach to the people that we're networking with. Is one of the best ways to get started if you're looking to be a general partner in particular is becoming a passive investor.
Yeah.
Because not only are you getting in behind the scenes look, if you want to be very active passive investor, right?
For sure.
You can learn how the business is being done. You can learn how things are being operated. You can get those tidbits that you could apply to your business when you acquire your own deal. But you're also building relationships as well with those that you're partnering with. And we're all about relationships, right? And so
Totally.
I joke with people, I'm like, look, if you want to build a relationship, go drop $100 or 50 or $100,000 with them. That's a relationship.
That's awesome. I love that. I'm stealing that.
Sure.
Robert said that this past week at the mastermind. He's like, the best way to do business with somebody is to do business with somebody.
Yeah.
Right. So if you want to build a relationship with a great operator and get on the other side of the table, being a passive investor is a great opportunity. And it can also give you some insight into, Dina, this, and Cody and I know this, how much work being a general partner is.
Oh,
right.
yeah.
And that's not always for everybody, which is why passive investing is great for busy professionals as well.
For sure. I actually, that's one of the reasons my business partner and I founded PCRP Group, because we knew that there were a lot of people that we connected with that said, and my husband and I would get people, and her husband would get people that would say, hey, can we just give our money to you? Like it's going to take me so long to figure out what you know and how to get where you guys are. Can we just give our money to you and you go do it? And one day we were like, well, we could, right? And we know the right people. And I, again, emphasizing what you guys said, like getting really involved with the right people, aligning with the right projects. We're big on climate resilient markets. For example, a lot of the investors that we work with want to be more inland. So like, for example, we would do Central Florida versus coastal Florida, not because we're saying coastal Florida is not good market or good money, but we do know that insurance companies are looking at some of those markets differently, right? And they're, maybe getting to a place where I know for homeowners in some areas of the country, they're even dropping policies, or the rates are increasing to astronomical amounts. And if things aren't going to be insured, or it's going to cost more, underwriting is going to be a problem. So one of the paths that we've taken is going into more climate resilient markets. So aligning with operators in those markets and giving our investors what they want and taking it to the next level. So that levels our knowledge up, their return and opportunity. And we've found that these types of properties are bringing in higher returns because costs are lower, right? Again, experience you get from being an operator and understanding the whole process.
Yeah. Dina, I got to be honest, I've never heard of this phrase climate resilient market, which I do like. So we're going to have to dive in that a little bit further, but I want to kind of go back to the point of, when we're talking about discovering who it is that we want to partner with and who it is that we want to work with, whether you're on the general partnership side or a limited partner, it's very important that you spend that time doing due diligence, understanding who it is that you're getting in bed with, so to speak, because these investments are 5, 7, 10 years,
Absolutely.
So what does that mean to you as far as identifying the right people that we want to partner with?
That's such a great question. One of the things I love about working with our investors and being director of investor relations for PCRP Group is we strive to help people align with their goals. So I would say to anybody out there, when you're working, first of all, number one, are they aligned with what you believe in, right? Are their business goals, are their values similar to yours? It's going to be a big deal, right? Because the decisions that people make are going to be based on what they believe to be true. And if you agree with that or don't agree with that, that's where your money, if you're putting your money in a deal with those people, that's where it's going to be. And it doesn't necessarily mean that the people are bad or because you disagree with them, right? I mean, there's so much of that, like where we're boxing everybody. That's not what we're talking about. It's just, is it a fit for you, right? Does this project make sense? Does it align with your principles, right? So that's the first thing I look at. And I would suggest everyone look at. And do you like them? I know this sounds really basic, but we do well with people that we like and trust and align with, right? In principle, those are the people. I'm sure you guys have had these experiences where some of my closest friends today are from this industry, like real estate investing. It's like, why? Because we've matched up in our values, our profits, our principles. We go about business the same way. So I always say, who are they? What do they believe in? What does their company strive for? How do they take care of their customers and their investors? I always want to see when anybody wants to invest in a project, I personally talk to them and say, hey, let's talk about your goals and make sure everybody's on the same page, make sure everything's realistic, because we're getting into a partnership here for 5, 7, 10 years, right? We really all want to be 100% in the know. What are the risks? I think it's important to understand those as well. There is nothing that we do in life without risk. So if somebody was very, very risk averse, maybe this would be a fit, maybe it wouldn't be a fit, right? Might not be. So those are really, I think, those core pillars that I would focus on.
Cody, and this is something we preach all the time, right? Not every deal is for every investor.
Yes.
Right. And not every investment company or that has a certain thesis matches with every investor, right? And
right.
Our job as operators, or people that are very well connected in the industry, is we try to find a way to connect them with maybe somebody who does, right? If we have an investor who comes to us that says, hey, I don't invest in Texas, I only invest in Kansas City, then let's connect you with somebody from Kansas City that we know that we're well connected with, that we've had a great conversation with, that we feel might be the right investor for you. I think it always goes back to just finding a way to align and add value to them, regardless of whether they're investing with you or not. Right, Cody?
Yeah, absolutely, Brian. And, that's one of the things that when we talk about vetting sponsors or whatnot, that to me shows you the maturity in a sponsor when they can look you in the face and say, hey, listen, this is not the right opportunity for you. And I'm not the right fit for you,
Yeah.
And that's so important, because that tells you the integrity that sponsor has. And that's what we all should strive to maintain.
Absolutely, hands down. And, I think that where people maybe get confused is, we as sponsors, if we're doing a syndication or any acquisition, we want everybody to win. Right? We want everybody to win. If somebody in our group loses, we lose, right? It's got to be win-win. And it's everyone wins, everyone loses type scenario. So we would never, it wouldn't be, if I could dare use the word, energetically in alignment, right? Like it would almost, have some undercurrents that would, affect possibly any part of the deal, any part of the relationship, right, would be at stake. And that would definitely put a damper on it. So I couldn't agree more. And I'm much more focused on the right fit rather than an immediate, because the opportunities are there and they have to align with the right people. Otherwise they wouldn't be opportunities. There's plenty of people that are the right fit to fund a particular opportunity in any organization.
Yeah, we say this repeatedly, right? Where it's the deals are very easy to get into. They're very difficult to get out once you're in. So you better make sure it's the right partner.
Couldn't agree more.
And Dina, you wouldn't believe how long it took for me to get Brian to like me. I mean,
come on, Cody.
I could never see that. You guys are so likable.
No, it was love at first sight, I got to tell you. Except for the fact that I don't drink coffee. He still holds it against me, but we're working on it.
Oh, you're kidding. I might have to hold that against you. I'm kidding.
Oh, no.
I love, my husband does not drink coffee, so I understand, he loves the smell of it, but he will not drink it. I'm like baffled. I'm an Italian through and through, both sides of my family. So I grew up on coffee and cappuccino and demi-tasse and all that.
I think Brian's going to start his own coffee podcast.
Oh, I'm going to go on.
I'm in.
Oh, good stuff.
Love it.
Well, Dina, let's pivot then. I want to kind of go back to this again, going back to the phrase of climate resilient market. I really like that term. And to be honest with you, being here local in the Texas coastal markets, environmental factors are something that we're very familiar with every year. We're dealing with hurricanes and hail season and blah, blah, blah.
Yeah.
So, that strategy makes perfect sense when you explain it that way, when you're trying to avoid the external factors that are so prevalent in a lot of these markets, which ultimately can impact not only the physical structure of your building, but man, the expenses, the insurance is a problem, right? I mean,
absolutely.
Things like that. So talk to us a little bit more. How did you kind of construct that thesis on, getting away from those I guess, climate exposed markets?
So it's interesting. One of our founders and partners, my business partner's husband, Mike, he studied ESG, and he's absolutely amazing. He's a risk analyst. We're talking internationally. And so we were talking about what affects, wherever somebody stands on the climate debate. This isn't about, what you believe in with climate issues. The fact is we're having them, right? That's undeniable. And what is that doing to people's money? What's that doing to the projects that are in these areas, with regards to insurance, financing, municipalities, taxes, structure? You've got, local tax, state tax, federal tax. Things are changing because of what's going on. Even BlackRock and State Street are looking at portfolios and looking at, the risk of this, like climate risk in these markets. And they're actually going to be changing a lot of their underwriting. Now, that's what made us go, whoa, what does that mean? Think about if people like us got a development, I'm in a deal that's a 400 unit community and it's in San Antonio. And if, heaven forbid, we were in that, we're planning on being in for 5 to 7 years, that operator couldn't get refinanced because of the climate, or because nobody would insure them, or the insurance that they can get is so astronomical financially, it just doesn't make sense. It skews the numbers. And that would be, detrimental to a project for sure.
And to that point, yeah, oh, absolutely. And that's one thing that we experience that here across the Texas coastal markets is
Florida here. So yeah,
right? I mean, insurance, we've experienced so many losses from environmental impact over the past few years that we're seeing insurance carriers back out. We're seeing increases in premiums and such. And it creates such a burden when it comes to your financial analysis. And we're warning other people that are coming in from out of state, because we're seeing this quite frequently here in Texas now, where out of state investors are coming in and they're buying and they're underwriting these deals. And it's like, you have to really be careful, because you're leaving yourself wide open. Yeah, for sure.
Literally. For sure. I'm originally from Westchester County, New York, and my parents moved to Central Florida when we were younger. So I grew up here. So we always joke about how we really are a hurricane, like, we don't have any energy on it, right? You guys probably don't either. It's like, if it's not if it's a Cat 1, oh gosh, yeah, that's a wave in the ocean, right? Like we don't even blink at those things. But it can even a Cat 1, if you think about just the winds and look at some of the things that happen, the wind damage, is even more severe part of the hurricane than flooding in some cases. Although we've seen tropical storms recently in the Northeast doing all of that flooding, and that is definitely impacting real estate values. I mean, it has to. And one of the reasons I think we like multifamily, and I'm sure you guys are familiar with the fact that it does reduce the carbon footprint, and it does allow, especially if you can if you're doing some build to rents and you're structure them in areas that are, have, mass transportation, and they can walk to different things, and it's going to eventually be more environmentally friendly. That's one other thing that's really wonderful. But really, just talking basically, when we say climate resilient, we're just talking basically about, what does this do to the project? What does this do to the bottom line for the operators, the limited partners? Everybody in that investment is at risk, and it's too big a risk that a lot of people, there's smart people and very smart people, and very smart people are looking at this, and very smart people are saying, hey, let's look big picture down the line, 2, 3, 5 years. What's it going to look like? So if I'm in Orlando, Florida, doing a multifamily versus Miami Beach, I can't guarantee that we won't get a hurricane in Orlando. I can't guarantee we won't get inclement weather, but I can be pretty sure it's not going to be the same as it's going to be in Miami. That's really what it comes down to.
Yeah. And, another interesting thing too, and this is this weird microcosm that we have going on right now, where you have not only the weather factors or environmental factors, but you also have our supply chain interruption right now where,
Yes.
heaven forbid you have any type of loss on your property or you need to do any type of replacement because you can't get anything. You can't get materials. You can't get appliances. I mean,
labor,
labor,
you can't get people.
Exactly. So this concept makes complete sense, and I can't say that I don't disagree with you either. I mean, that our job as operators, when we talk about going out and finding the next opportunity, is to hedge against our risk, right? And
absolutely,
and this is something to definitely keep top of mind. I agree with you for sure.
Yeah, people, and our investors that we work with, they've all expressed great questions about that. When I'm talking with them, they're like, how do you handle those things, right? And when you start hearing that in your business from a lot of people, you got to take a look, right? Because it's not just them being paranoid, it's them being savvy. Like, okay, well, in 5 years, what does this mean for me if I'm putting $100,000 into this, or $50,000 or $250,000, depending on what level they're coming in the investment at? Like, what does that mean? Like, what happens if this happens? What's your plan? So I think it's beautiful why it's happening right now in the fact that it's upping our education once more. We're learning, we're growing, and it's our job. Like you said, it's our job as operators to protect our investors. I've actually had several projects brought to me in the last week, and 4 of them, because the numbers looked good, but because of where they were located, I'm like, this group won't fund that. And it's not because they're bad operators, it's just because of the location of those projects. And when I express that to them and I let them know, like, we love these people, they're great people, but it just wasn't a right fit. And they actually were like, gosh, I respect you so much that you will protect, your investors' desires. I'm like, well, that's why they aligned with us, because we all, and this is the importance about really working with people, right? That you like, know, and trust, and are in alignment with your values, right? So we made that commitment to them. We have to take care of that. We have to take care of them.
I respect that a lot about you, Dina, because that is so important. You're absolutely right. It's that alignment of interest is so key. And like you said, having a plan is just quintessential. I mean, you have to have that as part of your business. What do you think, Brian?
Absolutely. There's always what's the saying? Everything's going well until you get punched in the face, right? So I think having a plan in place, asking smart questions as a passive investor about flood zones, and tell me about the loss runs from insurance, and how did that happen, and what's your plan if that happens to us, and who's the insurance carrier, and
what's your experience?
What's your experience? Dealing with those things. Do you have some sort of consulting? If you don't, for somebody that can kind of walk you through that. There's so many great questions to ask if you're a passive investor and you're investing in an opportunity that could potentially be in an area where, one of the things we're talking about, like, we're both very familiar with hurricanes. And I was laughing at your statement because my wife and I are the same way. I'm like, oh, it's just another hurricane. People, you get calls from friends and family and they're like freaking out. And I'm like, no, I'm just sitting at home doing my thing.
It's, and it used to be when I was younger, because I'll definitely date myself. Like, we didn't have a huge storm in Florida, like, since Hurricane Andrew. And I remember being in my early 20s, I was in college when that storm hit, South Florida. And that was the biggest deal at the time. And it was a Cat 4. And now when we look at, storms like Katrina and the devastation, right? If you have a hurricane that happens once every 20 years, it's one thing. But these are, they're happening more frequently. Even the smaller storms are having huge impacts on coastal areas. And it's not just that. I mean, think about fires and the wildfires out west, and tornadoes. And, we're never going to be able to 100% dodge every single thing. But if we can mitigate that risk, we can maximize the potential for reward and the opportunity.
Love it.
Along the same conversation, considering trying to hedge against that environmental risk, does that push you or propel you to more move towards a certain type of product as far as vintage, like, staying away from maybe your older 50s, 60s, 70s building? Does that come into influence at all as far as what type of opportunities you're chasing?
Yes, definitely. We mainly focus on Class B multifamily. So 10 years to 20. And one of the things we also have discussed is, working and aligning with people that are putting in more energy efficient and resilient materials. Because even some operators that are, closer to the water or closer into some of these areas, they're looking at materials that are going to, protect against maybe some environmental elements that are happening. And I think that's a wise choice. But as you say, that's challenging today with materials and just getting the right thing. So I think this is going to be, and this is my entrepreneur brain, somebody's going to come out with products and services that are going to handle this. With all of this chaos comes opportunity, right? There's always something good that can come out.
To that point, I was thinking about this yesterday, and I was having a conversation about the labor shortage and the problem that's putting on. I was speaking with a property manager, and it's putting such an impending stress on the property managers because they can't find good labor.
Yes.
And when they do, they're paying a premium for that same labor that would normally never qualify for that type of salary. And so it got me kind of thinking. It's like, to your point, is what's going to be the next innovative process that comes out to do that? How do we,
correct.
I hate to say eliminate the job, but how do you find a way to innovate your business to where if that happens and you lose employees, you could still operate efficiently and functionally? And so you're right. And everybody's out there, there's always people looking for new ways to innovate the space, which is great.
They're getting to a point where they have to. One of my husband does a lot of coaching for newer investors, mainly in residential right now. And he does some with commercial, but he was talking to a student and all of us were having the same conversation. And he was saying that it's costing him to get people to do the work twice as much per hour. So where just literally 6 months ago, it was $18 an hour. Now it's like $37, $36 an hour. And if they got this project based on the labor rates they have been accustomed to receiving from people, now their project cost just doubled literally on the labor, and they can't make their margins. So this is definitely, we see this in residential. This is definitely going to be something that has some trickle for sure. So, but they're going to have to, there's going to be somebody that will break that 4-minute mile, right? There's going to be somebody that'll go, I know how to do this. I figured out a way, because they have to, right?
Let's do it. Us three right now.
I'm in. Let's figure it out. We could
do it. Let's do it.
Put it together.
Awesome. Well, Dina, this has been a really great conversation. And we were talking before the show, we were all at the same networking event this past weekend.
Amazing.
And we didn't have a chance to connect, but I'm so glad we're connecting now. And it's just been really fun, and really appreciate you sharing your experience and your knowledge. I know, Brian, I've picked up a lot of good nuggets here. I don't know about you, but
absolutely added a lot of value.
Oh, absolutely. It's been a pleasure. I love when we can get together and talk candidly about what's going on and all learn from each other. I think that's really, really huge.
Absolutely. Yeah. This is where you grow for sure. 100%. Well, before you go, Dina, we have 3 more questions for you and then we're going to wrap up. Okay.
Yeah, sure.
All right. So one thing that we do like to ask all of our guests is, what do you like to do for your continued education to further your own investing?
I love going to conferences like this weekend, right? When I go in, I specifically go in as a student because I'm invited to and have spoken at many conferences and taught real estate classes. And you can learn something when you teach too, but there is a magic of getting to experience just sitting in the audience and really drinking in from the presenters and the speakers, their knowledge. So I love and highly recommend go to, really good conferences, and the opportunity there to connect with like-minded people. It's another great resource, having great conversations. Books, love books. I've always been a reader, but I know some people aren't. My husband's definitely more of an audiobook person, and I'm definitely more of, I like to hold the book in my hand and read it. I'm just more visual maybe, but I love learning from books. And I would always highly, highly recommend in any field, anytime I've ever wanted massive growth, get a coach. Get a coach. That's something I do. for everything. If whether it's getting in shape, losing weight, my daughter, I hired her a coach to help her with her SATs, right? I mean, just when you want to get better at something, you got to hang out with people and align with people that can help you get better.
100% agree. Yeah, that's
Yeah.
powerful. Good. So Dina, looking back on your trajectory, what was that one moment of time or one event that changed the course of your trajectory?
As far as investing, getting involved.
Yeah.
That light bulb moment for us was my husband and I, we wanted to have kids, and we got married in our, mid 30s. So we got to that party a little late, right? And so we were like, okay, well, time is of the essence, right? So we got to make some things happen. How's that going to work if we're both working, 40, 50, 60 hour a week jobs, right? And they were fantastic and, paid, like we said, thought we paid all the time, but you didn't have to be a math major to figure out, well, hey, I'm going to cut my income in half. And I had it on good authority that kids were really expensive. So yeah, and that's true. And I'm going to increase my expenses. We have to figure something out. And that was a big moment for us when we were like, okay. And then we kept coming back to real estate. And I think that was really the pivotal point for us for changing, because our families were totally appalled. They were like, you both have college degrees. You've got masters and certifications and this and that. What are you doing? Are you crazy? And that was that moment where we were like, no, this makes sense for us.
Absolutely. Wow. All right, Dina. So what advice would you give to the listeners to help them grow their businesses?
Keep on getting educated, and really align with, a good coach, mentor, people. Sometimes we take advice from people that we love and trust because they're family or because they've been in our lives for so many years. But it's hard. When I say this, I'm not saying it lightly, to step back from them, not to step back from them personally or emotionally or not love them, but really look at from a business perspective, what are their results and do they align with what I want my results to be? Right. And, should I learn from them, or should I learn from somebody that's doing it at a high level, keyword being consistently, not just one hit wonders, but somebody that's done it more than once, right? Maybe even more than 10 times.
I love that. I love the saying, don't take money advice from somebody who's broke.
Yeah. Results don't lie, right? I mean, anything I've ever done, it's like your results are based upon what you're doing or not doing. And it's not to insult yourself or hurt yourself, but just to say, hey, do I like these results? And if I don't, then I have to go back to the drawing board and go, okay, let's go back and reverse engineer this and say, hey, what's going to help me hit this mark? What do I need to grow to here?
Great advice, Dina. Great advice. So, well, tell the listeners how they can learn more about PCRP Group and learn or get connected with you. Excuse me.
Oh, absolutely. I love, helping and educating people. We're doing an educational series that I'm leading that is going to be super cool. It's going to be a series of videos that are about maybe 20, 30 minutes long. I try to keep them, at a good length to where it's everybody, no matter what they're doing, can actually learn from and benefit from them. And to get access to me and those, you can go to our website, which is pcrpgroup.com. You can sign up for any of our education. It's free. We love the education piece, and we know that people that are very well educated make great decisions. And you can always email me, Dina@pcrpgroup.com, with any questions or anything that I can be of service for.
Awesome. Well, Dina, we appreciate you being here today. Great conversation. Definitely look forward to staying connected.
Yes, definitely. And maybe the next conference we'll actually see each other.
We're making it happen.
For sure. Thank you so much for having me. It's been a pleasure.
Thanks, Dina.
Thanks.
Take care, guys.